Inactivity fees and dormant accounts in banking. Banks are increasingly imposing fees on inactive accounts. An account that remains inactive for a certain period is referred to as a dormant account. Amidst prolonged low interest rates putting pressure on profits, the maintenance and management costs of accounts and passbooks have become burdensome for banks. Therefore, banks are taking measures to reduce account management costs, including encouraging a transition to internet banking, and as part of these efforts, they have introduced fees for inactive accounts. Previously, making contractual changes that disadvantaged customers, such as introducing fees for inactive accounts, was prohibited under the Civil Code. However, with the Civil Code amendment in April 2020, it became possible to make contractual changes that are detrimental to customers if there are reasonable grounds. Fees for inactive accounts have been introduced under the premise of reasonable grounds to prevent illegal activities like money laundering, since inactive accounts are often associated with such practices. A certain type of account that remains inactive for a specific period is referred to as a dormant account. According to Government Public Information Online, it's reported that approximately 120 billion yen worth of deposits in accounts with no transactions for 10 years occur every year. To facilitate the effective utilization of the funds held in dormant accounts, the Act on Utilization of Funds related to dormant deposits was enacted in 2019. Under this law, an account that remains inactive for 10 years is defined as a dormant account, and the deposits held in such accounts are termed dormant deposits. Additionally, dormant deposits can now be utilized for private charitable activities. However, just because there has been no activity for 10 years, it doesn't mean that all deposits immediately become dormant deposits. The types of deposits that become dormant deposits are generally those commonly used. This includes regular bank savings accounts, postal savings, current accounts, fixed-term deposits. However, foreign currency deposits and savings schemes designed to assist employees in building assets are not included. Additionally, if an account remains inactive for over 10 years and holds a balance of less than 10,000 yen, it generally becomes dormant account. On the other hand, if an account with a balance exceeding 10,000 yen remains inactive for more than 9 years, the financial institution will send a notice to the registered address. In cases where the notice does not reach the account holder due to reasons such as an unknown new address, the account becomes dormant account. Even if the notification doesn't reach you, if there are subsequent activity such as deposits, withdrawals and so forth in the account, it won't be classified as dormant. Here, the activity includes actions like balance inquiries made by the account holder. Subsequently, the balance of dormant accounts is transferred to the Deposit Insurance Corporation. They select NPOs through public solicitations to utilize these funds. We've explained the imposition of inactivity fees, which means that as these fees are applied, it results in a decrease in your account balance. As a consequence, when your account balance falls below 10,000 yen, notifications will cease to be sent, and your account will automatically become classified as a dormant account. Therefore, it's advisable to consider closing your account before the balance drops below 10,000 yen. You can withdraw cash from a dormant account, but it requires in-person transactions at a bank branch or other similar means, as ATMs are not accessible. Additionally, the process may take a few days to complete for withdrawing your deposits. Finally, to withdraw funds before an account goes dormant, it's essential to diligently manage your existing accounts on a regular basis. In addition, if you no longer use an account, it's crucial to promptly close it for responsible financial management.